Hi everybody, my name is Miro Svoboda. Welcome back to the channel. In today's episode, we'll talk about retiring abroad and what steps should be taken, what plans should be made prior to retiring abroad. One of the most common questions we get all the time, first of all, is am I able to receive CPP, OAS, and other government benefits abroad, and how am I going to be taxed? So let's start with a simple concept of being a non-resident for tax purposes. When somebody lives outside of Canada for more than 6 months, and if you sever all of your ties or most of your ties with Canada, you will become a non-resident as far as taxation. There are a lot of jurisdictions, a lot of other countries that have lower taxes than Canada, so a lot of retirees will consider becoming non-residents. But the trade-off is that you would be opting out of Canadian healthcare. So your taxes might be lower living abroad, but also obviously you cannot participate in MSP. So let's talk about government benefits. Let's start with the OAS, Old Age Security. And in order to qualify for OAS, Old Age Security, you need Canadian residency. 40 years of Canadian residency after the age of 18 would qualify you for 100% OAS benefit. Now, in order to receive any OAS at all, you need at least 10 years of Canadian residency. But if you wanted to receive OAS abroad, qualification is a little different. It is 20 years. So 20 years of Canadian residency would qualify you to receive Old Age Security abroad. And at 20 years, you would receive about 50% of the overall benefit. Now, if you do not have 20 years of Canadian residency after the age of 18 and you still wanted to collect abroad, there are two other conditions that could actually help you qualify. And one of those two is if you were working for a Canadian company and living abroad, the time while you were living abroad working for a Canadian company would be also counted towards qualification towards OAS. Or if you were living in a country with a social security agreement with Canada, the time spent in that country would also count towards qualification towards OAS, Old Age Security. OAS clawback or the recovery tax is applicable while you're living abroad, or I should say is generally applicable while living abroad, because there are actually some countries where the OAS clawback would not be applicable. And again, we'll be posting a link to list all countries, and you'll be able to see which countries are actually exempt. But as I said, generally, in most countries while living abroad, the OAS clawback would be applicable. Now let's discuss GIS and some other benefits that might be applicable to most Canadians. GIS, Guaranteed Income Supplement, the allowance and allowance for survivor, all three benefits are for Canadian residents only. So unfortunately, if you're living abroad, you would not be able to collect either one of those. You would not be able to qualify for GIS, you would not be able to collect allowance or allowance for survivor. The last thing I wanted to mention regarding OAS, the Old Age Security, is that if you're collecting OAS abroad, there would be tax withheld at source in Canada, and it is host country specific, but generally the amount is between 15 and 25%. We will post a link to specific rate for each country just down here below, and you'll be able to look up each country and the rate applicable. Let's move on to the second major Canadian pension benefit, which is the CPP, Canada Pension Plan. And CPP is an actual pension plan, so your future benefit is based on contribution. So anybody that has contributed into the CPP via taxation will be able to receive CPP in the future in retirement. Whether you're in Canada or retiring abroad, it doesn't really matter. You will qualify for CPP based on contributions. So while you were working, you were making contributions towards the CPP. Your employer would have been making contributions on your behalf. Your employer would have paid 50% of those contributions. Yourself, you would have paid 50% on your behalf, and you'll be collecting your benefit in the future, or you might be retired already. So similar to OAS, the CPP, if you became a non-resident, taxes withheld at source on CPP are generally between 15 and 25%. Again, the rate is country specific, and as I said, the link to look up a rate for your specific country, your host country, is just down below. The other question we're getting all the time is, how will I actually receive my CPP or my OAS or my payments from my pension if I'm living somewhere abroad? Well, first of all, you are able to receive a direct deposit if your host country is actually able to accept direct deposits. Then Service Canada will process direct deposits to you in your host country if the host country is able to receive that direct deposit. But let's also look at an example how tax withholding would actually work. So let's look at somebody, just to make the numbers really easy, somebody who is receiving CPP $1,000 monthly, which is $12,000 annually. And let's assume tax withholding is 15%. So 15% would be withheld on $12,000, which is $1,800. So $1,800 in tax would be withheld in Canada. Now, you will receive, if there's a tax treaty between your host country and Canada, you would receive a tax credit in your host country. And how this works is that if you had other taxable income in your host country, the $1,800 tax that you already paid in Canada would be credited to you in your host country towards tax on your other income that you generated. Last couple of topics I wanted to cover today. First of all, private pensions, then we'll talk about RSPs and RIFs. So let's start with private pensions. If you did qualify for a private pension, obviously your benefit is based on pension criteria, because every pension is different. But as far as taxation, very similar to CPP OAS, 15 to 25% is generally withheld at source. This is dependent on your host country again, and you would be getting tax credit in your host country for that tax withheld here in Canada. RSPs, RIFs, if you were taking a lump sum out of an RSP, generally 25% would be withheld at source, and very similar as with CPP and OAS. If you're collecting RIF income, the amount generally withheld is between 15 and 25%. Again, host country dependent, and same as with CPP, OAS, and private pensions, you'd be getting a tax credit. If there's a tax treaty between Canada and your host country, you would be getting tax credit for the tax withheld here in Canada. Transitioning into retirement is a huge change, and we encourage all of our clients to have a retirement plan. But even more so if you're considering to retire abroad, it just makes things slightly more complicated. So I urge you to consult a planner in your area, or feel free to reach out, send me an email. We'll be posting a couple of links just down below. But also, please like the video, please like the channel and subscribe to the channel. We'll be releasing videos on a weekly basis. And thanks for tuning in today. Have a great day, everybody.